so much for jumping in, everyone. My name is Zoe Calderbank from LMG Asset Finance. I'm the Operations Support Officer here, and I also handle all things lender updates. So today I would love to welcome to the panel from ScotPac Business Finance. We've got Xavier Reggio and we've got Benjamin Brooks, two very big superstars in the ScotPac Business Finance space, and they are really keen to share some of their product niches and just the benefits of their product moving forward. They have mentioned they would love some questions along the way. So please, if you do have any questions for them, chuck yourself off mute and jump into the conversation. We would love it. I will hand that straight over to you. Whoever would like to go first, let's pass it on to Xavier.
Thanks.
Take
Thanks,
it away.
thanks for those kind words and the introductions. And everyone, appreciate your time jumping on today. So Ben and I will just go through a few different things about ScotPac, talk to you about the business, what we do, a brief overview of our products, and then go through some recent live examples of deals we've helped out recently. Okay, so we'll get into it straight away. So ScotPac's been around for about 35 years now. Originally, we were a debtor finance and trade finance company. In the last sort of 5 to 7 years, we've really evolved and become a whole of wallet type lender. We now have asset finance facilities. We have business loans, which Ben will touch on later. We have property finance, so we can really accommodate your clients and provide multiple solutions under the one roof. We've got offices in every state pretty much around Australia, offices in New Zealand, and also an office in China that services mainly our trade finance business. We've also got local decision makers, which really assists our speed to market on applications, which we do try and pride ourselves on. Going into our solutions, as I mentioned, invoice finance is a core part of our business. In summary, invoice finance is basically a line of credit or a funding facility which is secured against a company's receivables. If you think about, say, a transport business, they issue an invoice on day one. It might take 30 or 60 days to get paid. In that period, they've got fuel bills, they've got wages to pay. What invoice finance does is effectively allows them to leverage their receivables and access that money up front to put that money back into the business. We have trade finance facilities which can assist clients with purchasing materials or stock from both domestic and overseas suppliers. Under our trade finance facilities, we're able to fund up to 100% of the supplier invoice, really taking that financial burden away from the client and providing up to 120-day terms for repayment. As I mentioned before, asset finance, we can assist with the purchase of equipment into businesses. Generally, we look at up to about $1 million per entity on a standalone basis. However, if we're looking at a combo or a whole of wallet solution, we sometimes go up to larger limits depending on what other facilities are in place. And then lastly, the business loans. So ScotPac acquired Business Fuel, a business that had been running successfully for a long time, and they're part of our business now. So we've got Boost Business Loans, which do secured and unsecured loans over a 12, 24, 36-month period that amortizes down over that same period. In terms of what I mentioned before, so in invoice finance, you're generally able to access about 80%, sometimes up to 85% of the invoices upfront. So within 24 hours of issuing that invoice. And as I said, it really allows the client to inject that money back into their business, to reinvest it in stock, pay wages, pay suppliers, which can assist with that growth process. I'll hand over to Ben just to go through the next couple.
Yeah, thanks, Xavier. So Xavier briefly mentioned there, obviously we've got an asset finance division. Mentions there about the benefits from the fund up to 100% of the purchase cost of an asset. We purchase new or pre-owned assets as well locally, whereas they mentioned from overseas. And actually just going back to that trade product, it's quite exciting to broker. And that potentially have two bites of the cherry there, where very importantly, a piece of equipment, say from Germany, we'll use our trade finance to pay for that to leave the court over in Germany. And then when that arrives in Australia, we'd actually swing that over to an asset finance loan, which then extinguishes the trade finance. The customer ultimately has a traditional equipment finance loan over 4 or 5 years. That's a good way that we can use a couple of different products hand in hand, ScotPac. Another good point it mentions there is access to capital that you've got tied up in assets that you've already owned. So traditionally called capital raise. So if you've got unencumbered trucks, trailers, all that type of stuff, then definitely looking to raise capital against those. As they said, we go up to $1 million on a standalone piece of equipment. But I was just talking to one of our asset finance BDMs, and they mentioned that for that particular client, if you'd have invoice financing, we were actually able to raise a $12 million limit for them to be able to draw down multiple assets. I'm just having a bit of a problem with my audio, Dave. I might get you to quickly swing on to the next slide and throw over to you if that's okay.
Yeah, do you want me to take over, Ben?
Yes, please, mate.
Yeah, so Ben is part of our business fuel or boost business. And as I mentioned before, we can do unsecured or secured loans, term loans over an amortized period. We take a look at the banking or the client's bank statements for the last 6 to 12 months and really run our assessment off that. It's quite an easy application process, and we can have it funded within sort of 48 hours. Generally, we look unsecured up to 200 grand, and then secured facilities from 200 to 500, depending on the equity available in those properties. For Ben's team, basically all they need for an assessment is those bank statements, like I mentioned, an ID, and the trust deeds if there's any linked to the business.
Hey Xavier, how's that audio quality now? Have I come back?
That's better, mate. Yeah, that's better.
Yeah, terrific. So just to pick up where you left off from there, so a bit of a different style lending as far as the Boost business loan goes. It's all based on bank statement data. So we don't get any accountant's figures or personal tax returns. We get 12 months worth of banking, have a look at the last 6 months worth, and really we're interested in how many deposits are going in each month. And we can generally lend up to 100% of the customer's average monthly banking, i.e. if they bank 100,000 a month, we can look at a loan of 100,000. If they bank 50,000 a month, then we can look at 50,000. You can use the money for any worthwhile purpose at all. So, potentially it could be a bespoke piece of equipment, or as Xavier said, you've taken on a new contract, but you've got to pay wages and fuel before you're going to get paid yourself. Another really nice point is we don't actually have any industry restrictions. So happy to lend into construction and agriculture, second-hand car dealers, a few of those areas that potentially a couple of my competitors might not look at. Very quick turnaround time. We're sort of 24 to 48 hours maximum. So yeah, gets that customer in the position to take advantage of a particular opportunity and lets them do that very quickly. The other one, as far as the business loans go, is we do also have a property division. So essentially there, we're looking at a first mortgage product that's up to 80% on residential property only at the moment. We'll do loan limits up to 4 million for Metro, Melbourne and Sydney. Outside of those areas, we're looking at about 2 million. Again, you can take cash out up to $500,000, again, for any worthwhile purpose. So that could be to pay down any tax arrears you might have. It could be, again, just for working capital and cash flow. Could be to take out an existing private lender that you might already have on there. So, yeah, plenty of scope to be able to use the property division to be able to unlock some additional working capital there as well. Thank you, Zave. So in terms of identifying opportunities, I suppose, really, if you ever hear any of your clients saying things like this, i.e., I've got tax arrears, I've got payroll tax I need to catch up on, or, any super, maybe you hear them saying, I'm turning away orders because, I just can't order that stock in bulk to be able to fulfil these supplies and orders coming through. Particularly for clients who are in the asset finance, there's so many synergies between what we do as far as unsecured loans. So, a client where you finance an asset, a truck, and then unfortunately they've blown the engine, they need 40 or 50,000 very quickly, to get those repairs done and get the truck back on the road. As mentioned before, if you're having problems with sourcing an equipment financier for a bespoke piece of equipment, we can certainly look at that. If you hear that the directors feel that they're constantly, tipping in cash, or they've outgrown their existing facilities, and in particular with using an overdraft with the bank, that's a very static product. You get your overdraft limit set, and unless you've got property, you're probably not going to get an increase. Whereas with our invoice finance product, as your business grows and you start to get more receivables on your book, we can actually increase your limits that we might have. So, yeah, it's really just about anything to do where the customer's feeling that, they're just hampered because they haven't got, access to that cash, or, if their supplier terms are always being shortened, so now when they purchase stock, they've only got 7 days before they need to pay for it. Again, that's something we can help with. And on the reverse side of that, if your customer's doing work for someone and their terms are that they're not going to get paid for, sort of 60 days from the end of the month, again, we've got products to be able to release that capital and working cash from those invoices to be able to help that customer through those couple of issues that they might have.
Thanks, Ben.
Dave.
So as I mentioned, we'll go through a couple examples of recent deals we've actually worked on and how we've assisted. So in this first instance, we had a client that had came to us. They were in sort of the early stages of their business. They'd been going for a little while, but still quite in the infancy. They came to us and they needed to be able to grow and fulfill orders and purchase more stock. With the traditional lenders like the banks, they required property to pretty much provide business facilities, where we didn't have to. The client was able to use their balance sheet assets, being the receivables, to access a line of credit. It was a $500,000 facility in this instance, and basically allowed them to purchase the materials to go into making this product to fulfill future orders and continue that growth trajectory. So it's quite a successful product when used in the right instance. It allows clients to grow. As Ben mentioned before, we can grow with the business. We don't have any financial covenants on our facilities, so we can deal with clients that are loss-making, have ATO arrears, not property-backed. We can even look at clients that are just started or just in a startup phase as well. So definitely speak to us if you guys have any scenarios on the go. In this second case study, this was a bit of a combo facility. As I mentioned, we do have a whole of wallet type solution here. This scenario, the client used a combination of our trade, invoice, and export finance facilities. This business was actually referred to us from ANZ. ANZ had some internal changes to their product and were no longer able to offer the client the existing facility. So they referred it on to us. We provided $800,000 trade finance facility to allow the client to purchase their materials from China. We funded and continue to fund 100% of their supplier invoices ongoing, so taking that cash burden away from them. And then on the back end, when the product arrives and they manufacture and actually sell it, they draw down against the invoices, both domestically and to their New Zealand debtor through the export finance facility, which will then repay the trade finance bill and provide surplus. The surplus comes into the business for whatever requirements they may have, wages, rent, etc. So it's quite a good example of how we combine different products to provide a holistic solution for this business. On to you, Ben.
Yeah, thanks, Dave. That's one for me. So as we can read there, the company was looking to fund some new steel fabrication equipment, and it was a bit of bespoke sort of equipment. So, very hard for traditional, equipment financiers to, be able to go ahead and do. Obviously, acquiring this piece of equipment was going to bring in more revenue for the client. and also help manage their current projects that they had in progress. So the opportunity there, of course, was that, you know, the client needed this piece of equipment that was unique, that other people wouldn't help with. As I mentioned before, because you can use, as far as the Boost business loan goes, you can use your money for any worthwhile purpose. And obviously, you know, getting yourself a new piece of equipment that's going to, you know, increase your sales and your cash flow, you know, is a very worthwhile proposition. So this customer was banking, you know, in excess of $110,000 per month currently through his bank statements. And just on the bank statements and some photo ID and a credit check through Equifax, we were able to provide them a $110,000 loan unsecured for the customer to be able to go and, you know, purchase that piece of equipment and get things on the move for themselves. So as far as getting a deal through to ScotPac, and we already checked with Zoe before, and certainly this presentation is going to be made available to everyone. And so to be able to lodge a deal through ScotPac, we've got what we call the partner portal. And on the particular slide here, you'll see on the right-hand side there to register yourselves, there is a link, you know, attached to that slide. As Dave also mentioned, you know, that's going to warrant a call then from one of our relevant BDMs, depending on which product that you're actually looking for. So we can start to, you know, workshop that deal, or if we need to send you out a bank link for the customer to electronically upload their banking, everything starts there from the partner portal. As Xavier mentioned in previous slides, you know, all of our products have local experts that are on the ground. And we really do feel like we offer I suppose, a concierge service where, you know, you're with the same lending manager or you're with the same BDM all the way through the deal. So you're not having to re-explain to someone else. You're not having to send documents to a different person. You're not having to go into a large credit area to get your deal approved. It's all handled by local experts who are more than happy to, you know, as I say, workshop and discuss deals. So I'd certainly encourage you all to register through the partner portal. And you'll also find that there's some other really nice tools and some marketing promotional type things there. You'll find out extra about ScotPac on how we do and what we go about doing it. So yeah, certainly if you're not already registered on the portal, yeah, grab yourself a copy of this presentation and yeah, get yourself registered.
And then finally, there's a bit of a product matrix that we've sort of developed to guide you through some transactions you guys might be seeing day to day. As Ben said, we'll get Zoe to share this presentation with you so you guys can have this front of mind and to reference in the future. But basically, it'll go through, tell you for each product who it might suit, what sort of facility limits we're able to assist with in each of those products, what the turnaround times are, the benefits of each product, and then also the eligibility. So, for example, on the invoice finance side, we look at funding receivables that are business-to-business receivables. We can't fund any consumer receivables. And for the invoice finance facility, we're able to look at facilities from as low as 10 grand all the way through to 150 million, which we are seeing these days. So look, I'll get Zoe to share this with you following this webinar. And if you have any questions, please reach out.
And I think, Dave, this is one of the most exciting slides that we run through because, you know, as everyone can see, you know, with that such a diverse product suite, you know, for 90%, 99% of your customers, we should be able to come up with some sort of working capital or cash flow solution or equipment finance or, you know, unlock the equity that's in their property. You guys that are on the webinar now will see that there's a couple of variations to the invoice financing, which is cash line and also cash connector. So just variations of your traditional invoice financing. You know, the cash connector product is where you can select which invoices you actually want to put through, whereas the main invoice finance product, we would be looking to factor all of your invoices that you come through. The cash line one that's there as well, that's a bit of a hybrid product between the Boost business loans and invoice financing, where we do look at your bank statements, but we also look at your receivables. and that particular product is a line of credit where we only expect interest-only payments. And so that's where I say, we love to workshop deals, find out about your client's business, and then in particular, what sort of tailored solution. And quite often, and you'll agree with me, Xavier, quite often we're finding that we are doing, multiple products, as that case study went through to say that, we can have the invoice finance. We could be looking at some property finance together with asset finance, and together we can tailor a solution that really does drive your customer's business onto the next level for them.
And even on recent transactions where we might be in the process of setting up a trade finance or invoice finance facility, and the client has an immediate need they need to solve, we can come in and provide a boost business loan through Ben's team to get them through that 2-week period while we have facilities approved and docs set up, and then basically take that out with the invoice finance facility. Ben's product has quite a good offering where they do get an interest rebate if they do pay back the facility early. So they can give you an indication of what that payout figure would look like at certain points with that throughout the term.
Yeah, and I can certainly vouch for ScotPac, definitely jumping into those tricky transactions and really helping the team to workshop deals. That's happened on more than one occasion where you guys have gotten us out of a tricky spot with just one of those transactions that, you really need to look outside of the box, which you guys do. So we do appreciate that. I had a quick question actually just around asset finance, and this slide is fantastic. This is just the most easy to read product matrix I've seen in a while. We're getting a bit of inquiry around those difficult assets to lend. So things like exotic cars or older cars. Is that something that you dabble in or can assist with?
Not really. We don't really like even directors' vehicles. We can look at vehicles if they're for business purpose, say a van or a ute. However, exotic cars are probably just not for us. Our asset finance facilities, generally, we look at primary and secondary assets. We don't really touch the tertiary space. So any sort of fit outs or pallet racking or anything like that is probably not going to fit.
Yeah. Oh no, that's great to know. That's really good to know. And then also I noticed you've got eligibility, so around that 2 years in business, again mainly for asset finance. But is there any flexibility on that for a slightly shorter term or anything like that? Just curious.
Yeah, definitely. So it all comes down to the strength of, I guess, what's supporting the application. So we do a lot of startups on the asset finance side as well. Say you've got a client that's been working in a transport business for a long time. They've gone out by themselves and they've got a work source letter or a contract. They want to buy their first truck. We can look at that scenario and assist there because there is a solid work source behind that, and then we can then build that into a forecast to show how the client's going to service it over that period. So it's not a solid 2 years in business. 2 years in business is probably it's solid for our low dock facilities. However, we can look at startups under our full dock facilities.
And just on that too, Xavier, that would be a perfect example where we can finance the truck because we've got the works order, and if that particular client is then delivering to businesses where it's going to generate invoices, we could also look at unlocking that working cap and cash in the invoices rather than that the driver having to wait 30 or 60 days. So again, how you can see that we can get a multiple product offering going that really does unlock the client's potential.
Yeah, that's right.
Yeah, that's awesome. Just you really got like the whole solution there for the client. So that's brilliant. Does anyone have any other questions? Feel free to take yourself off mute if you just wanted to check anything with the guys before we let them go. If not, as Ben mentioned, I will be flicking this presentation out to our attendees today. And then, of course, you do have the guys' contact details on the screen here as well for both Xavier and Ben. So feel free to screenshot that, but we'll also flick out some post communications after the session. But thank you so much, Xavier and Ben. I really, really appreciate you jumping in, educating the network, and spreading the ScotPac love. Love it.
Thank you very much. Thanks for your time.
Everyone. Yeah, thanks everyone. Thanks, Zoe. Appreciate it.
My pleasure. Have a great afternoon, everyone. See you later.
Thanks,
See ya.
Kate.